Good morning, folks. My name is Brian Baker, Logistics Manager at PFL. We hope everyone had a great weekend. The Dow closed lower on Friday of last week, down 98.68 points, closing out the week at 32,899.37 points, down 77.804 points week over week. The S&P 500 closed lower on Friday of last week, down 23.53 points, and closed out the week at 4,123.34 points, down 8.59 points week over week. The Nasdaq closed lower on Friday of last week, down 173.03 points, and closed out the week at 12,144.66 points, down 189.98 points week over week. In overnight trading, Dow futures traded lower and are expected to open up this morning minus 401 points. Oil prices rose again on Friday of last week, closing out the week with the second straight week-over-week gain. Investors are expecting higher U.S. demand as the Biden administration announced plans to replenish the strategic petroleum reserves. In addition, OPEC Plus announced a modest production hike yesterday. However, actual production will fall short of their target quota. Certain member nations are having production challenges and will never be able to reach their targets. WTI traded up $1.51 or 1.39 cents to close out at 109.77 per barrel. U.S. commercial crude oil inventories, excluding those in the Strategic Petroleum Reserve, increased by 1.3 million barrels week over week. At 415.7 million barrels, U.S. crude oil inventories are 15% below the 5-year average for this time of year. Total motor gasoline inventories decreased by 2.2 million barrels week over week and are 4% below the 5-year average for this time of year. Distillate fuel inventories decreased by 2.3 million barrels week over week and are 22% below the 5-year average for this time of year. Propane-propylene inventories increased by 1.6 million barrels a week over week and are 11% below the 5-year average for this time of year. Propane prices were down 3 cents week over week, closing out the week at $1.28 per gallon, but were up 45 cents year over year. The 5-year average for propane prices is 66 cents per gallon. Oil is lower in overnight trading, and WTI is poised to open down $2.10 per barrel from Friday's close. Total North American rail volumes were down 4% year over year in week 17, resulting in quarter-to-date volumes that are down 4.6 year over year, and year-to-date volumes that are down 4% year over year. 6 of the AAR's 11 major traffic categories posted year over year declines, with the largest decrease coming from intermodal and grain. The largest increase came from motor vehicle and parts. North American rig count was up 3 rigs week over week. U.S. rig count was up by 7 rigs week over week and up by 257 rigs year over year. The U.S. currently has 705 active rigs. Canada's rig count was down by 4 rigs week over week and up by 36 rigs year over year. Canada's overall rig count is 91 active rigs. Overall, year over year, we are up 293 rigs collectively. We are watching a few things out there, folks. On Thursday of last week, the DOE said that it will initiate a transparent, competitive process to replenish U.S. emergency crude oil distributed to alleviate global supply disruptions caused by what it calls Putin's war. The buyback process will begin with a call for bids to repurchase a third of the 180 million emergency barrels released as part of a coordinated action with our international partners to provide a wartime bridge supporting American consumers and the global economy in response to Vladimir Putin's war of choice against Ukraine. We thought the release from the SPR was for price control heading into the midterms. If we really want to increase supply, we should open up the drilling taps everywhere, become energy independent, thus avoiding wars. Don't know about you folks, but it's getting tiresome listening to finger pointing. The call for bids will take place in the fall of 2022 to secure delivery in future years when prices are anticipated to significantly lower than they are today and will represent a first tranche of purchase for the replenish of the SPR, which more planned after the purchases are executed. As part of this buyback plan, the DOE intends to begin a rulemaking proceeding to consider broadening DOE's buyback regulations to allow for a competitive fixed price bid process as an alternative to the index pricing that is traditionally used. Now this makes sense. Let's hope we buy back cheaper and we sold and make the country back some money. The reading of PFL's rail report today is an absolute must. Not only do we dive into more detail as discussed in today's podcast, we also summarize the latest petroleum by rail numbers, talk about refinery runs, overall petroleum import and export numbers, and dive into the latest U.S. employment situation. Bottom line, a lot of great information and a lot of fancy graphs. We hope that you enjoy reading PFL's rail report today. We do it all for you folks. PFL has been extremely active in railcar storage, return on lease strategy, subleasing, mobile repair, flaring, and cleaning. Make sure to check out our just posted reports at pflpetroleum.com or call PFL to troubleshoot any questions or concerns you may have at 239-390-2885.